Welcome back to Breaking Bitcoin. It is hard to get audio sync sometimes. Anyways, hopefully you guys are doing fantastic. This is Breaking Bitcoin, recorded live this Thursday evening of March the 26th, 2020, recorded live from the underground quarantine bunker. This is week 2 of quarantine, and this is your daily evening source for everything markets and finance. If you have any questions, drop them in the live chat. The moderators will direct my attention to them. We will do a Q&A section toward the end of the show. If you're watching on YouTube, make sure to subscribe and turn on notifications. Hit the like button. Let us know down below what you guys learned today, what you guys would like to see in the next episode. So we've got some updates. We're going to talk about a whole lot today. Obviously, the joblessness claim came out today. The unemployment claim, massive spike up in the 3 millions. And the reason why we didn't see any kind of atypical, I saw a lot of people on Twitter wondering, well, why didn't traditional markets tank? Look at this unemployment rate. Look how bad this is. Well, this was already known. We were talking about this prior. So it's only unknown knowns that will typically affect the market in a dramatic way, right? Like when you wake up the next morning and the market has dropped significantly, it's generally because, well, if you believe in the fundamentals, because something that was not previously known has now become known. When everybody knows, when the Wall Street Journal is talking about the jobless claim prior to the day of the release and expecting, oh, this is going to be so bad, and it is so bad, well, investors already knew that. So why would they get spooked? Anyway, so we had some decent rallies continuing on today in traditional markets on the news of the government-approved $2 trillion stimulus plan, not to mention the $4 trillion that the Fed is planning to pack a punch with. This economic rescue for many individuals seems to be drawing to a resolution. Third consecutive day of movement to the upside, pushing markets like the Dow Jones and many actually above the baseline. And with the Dow closing up over 1,300 points today, 6.4%. NASDAQ rallying nearly 8%. Most pundits are calling the bottom. Most pundits are calling the bottom on this past few weeks of brutal sell-off. So we'll see. We'll pay very close attention to this over the next few days. Now, let's talk about some premium trading group things. Meanwhile, Bitcoin having not a bad last few couple hours. I'm not going to lie. Feels very good to be spot long right now. All right, so premium group updates. So TradingView has lowered their compilation time down to 2 minutes, which means very robust strategy testers like the ones that I write are not able to compile right now. They simply get timed out. And if you try to compile a script too many times, they will just block your access for about an hour. So had a kind of a run-in with the Pine team earlier today. So anyways, I'm going to have to cut down the Ming strategy tester. I'm going to have to take out some of the confirmations, but that will be released to the alpha testers. I wanted to get it up last night, but I was running into those issues with Pine, so I'm going to strip it down after the show tonight and get that released. Pushed a lot of updates to the baseline indicator today, so make sure you guys go check that out. I'll be pushing the updates to Minx as well as the strategy tester for Minx being released to alpha. The Wadatar Explosion strategy tester should be released to beta testers this weekend, and then hopefully to the rest of the premium members next week at that point in time. Now, tomorrow at 9 a.m. UTC, registration for the Bybit competition is going to open back up again. We had some issues with some individuals that registered late. Their beginning equity was not calculated appropriately. It was about 10 individuals. I asked the community what they wanted to do about it, and they all voted to reset the competition. So that's what we're going to do. We're going to reset the Bybit competition, the trading competition. So again, we're going to have a 4-week-long Bitcoin trading challenge, no purchase required. You guys can find the link. Actually, I don't think the link is in the description, but it is bybit.reg.crackingcryptocurrency.com. It's not live yet. Registration will be live at 9 a.m. UTC. So make sure to watch the Discord for that link if you guys want to register. We had a good group of guys who registered last time and some good results coming out of the gate. So we'll just continue carrying that forward into the actual competition. All right. Make sure if you guys are watching to follow us on Instagram and Twitter. We post content there you will not see anywhere else. Also, make sure to check out the Samson Mao interview from San Francisco Blockchain Week. You saw the clip of that in the intro, and I apologize. I had Silvio Macaulay playing over the background, so I'll have to cut that out when the live stream is over. Hopefully you guys are doing fantastic. If you have any questions, drop them in the live chat. So much to talk about, so let's get right into the live scene for today's. We're going to start off with market analysis today. So we're going to skip all the negative news, all the negative stuff. We'll talk about that as we go, as you guys have questions, commentary. And then I want to talk a lot today about the Telegram results and overall, what to be wary of when you overall what to be wary of when you're looking at things like ICOs and initial coin offerings, because I think this is a very telling case. Obviously, very negative for investors and very negative for the company that participated in this in the first place once the SEC catches up with you. Or decides they don't like you, that's the situation that we're playing in, right? There's a difference between fundamentally believing in something like a lot of people feel about Bitcoin, where they're like, this is the future, man. I don't care what the price is. I'm willing to ride or die for this. And then, well, I've invested my life savings into this thing that I said I was going to ride or die for. Like, you really got to be able, be willing to ride or die if you invest equity into something, right? So things to be aware of. Other than that, we're also going to be covering the new Coinbase app and decentralized finance, the latest updates in that, and of course, Binance's evil plan to rule the world, if I might say. It's the, just wait until it's unfurled. It'll go down in history. It's prophetic. No, it's not pathetic. You guys can name that band. I will give you $10 in Bitcoin. Go. All right. Now, as I said, let's get to the live scene. So much to talk about. All right. So here we are in the live scene. This is the 45-minute Chicago Mercantile Exchange. Chicago Mercantile Exchange, Bitcoin CME futures, as we are wont to do, or as I have been doing lately. So anyways, push some upgrades to the baseline. So let's actually do this, if you guys don't mind. Of course, all premium members can find the baseline by searching for cracking in the indicator widget, and it's going to be this bad boy right there. Of course, if you're not a premium member, make sure to check out our free indicators, Ichimoku, Wadatar Explosion, and Exponential Moving Averages. I'm actually going to be publishing some, as I make upgrades to some of these indicators, I'm going to be publishing new ones as well. All right, so here's where we were yesterday, breaking down Bitcoin's price. Let's just look at where we are right now, coming off the heels right now of a very nice impulsive movement to the upside. So baseline, we're going to set this to, baseline time frame. We're going to set this to the daily. We want to be trading on the daily time frame, and we're on the super lower time frame. So we're going to get wicked to heck if we have that tight of a stop on the 45-minute. Here we go. Now, what did I talk about? I said, watch the Bitcoin CME futures chart. I said, watch the Bitcoin CME futures chart to see if it crosses and closes above the baseline. And here on the LTFs, we have just gotten that. And what do we get? Not a huge movement, but a nice impulse wave to the upside here. Again, let's look at where Minx gives us the go ahead all the way over here. And on the LTFs, if you're using the baseline of the lower, yes, ride the lightning. Okay, yes. Dun 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 dun. But anyways, Minx signaling for the long signal over here on the CME charts. We would not have caught that, but we'll get that. We'll get over to that. We've been above the baseline on the you Googled that, man. You Googled that. But Mr. Ether, that is correct. That is correct. Hit me up in the Discord, my brother, and I got you all day long. Okay. Well, we've been above the baseline on traditional markets for several days now, thus me being spot long. All right. So let's pay attention to this quite closely. Of course, we are on the LTF, so we do want to actually boost this up. Now, what I'm doing right now, I'll be going over with the premium members in tomorrow's webinar. Give Minx a little bit of time to smooth out here. All right. So here's the long signal from Minx crossing above. We have parallax confirmation 2 candles later, and 1 candle, 3-bar rule right here. We do have baseline confirmation on the daily. So nice movement to the upside here. One could have caught this, even trading the CMEs. Of course, you could use this as a leading. We're not really looking at this chart because we're not really trading on the CMEs, but it's just important to see. So we've got something very important that might be happening today with this cross and close above the daily baseline on the CME futures. Of course, the CME futures is excluding weekend data. So many would point to this as a more concise chart. There are strategies that I know members have come to me with where they only utilize the CME chart and do not use the actual spot exchange because they feel that the indicators are thrown out of whack by compiling weekend data, which is largely nonsensical. Almost always, wherever the CME futures close on Friday is where they end up opening back up on Friday. And it's like whatever happens in between is just this big, massive hole of just high volatility but low volume. Not always, but often enough to be statistically probable. Okay, so this is pretty interesting. Now, we do need to close the daily here. The CME is trading at 68.70. You do need to close the daily here. Above 65.90 is where we need to close the CME futures on the daily, as long as we do not get a large movement to the downside, a big nice sell-off coming out on this broach, this double tap of the top here, I think that we'll do okay. But again, we've seen this a lot of times. Overall, I think that this looks fairly good right now. Now, with that being said, let's actually get into the live price over here on Bitstamp. But let's get over to the Bybit chart. Okay. So same thing, I'm going to go ahead and update this screen to the latest version of the baseline. And of course, I'm going to set this to the daily. All right, so you can see we have been above the baseline for quite some time, here. Now let's get Minx pulled up, low time frame. So we're going to put this to, we're going to boost this up. Okay. That gives us some nice smoothage right there. All right, so let's take, oh, and one thing that we didn't do, apologies. Let's set that right, just like that. Okay, good day trading setup right here. And the red arrows that you're seeing right now are going to be the optimized kind of Minx sell, the optimized Minx sell signals. This is kind of a preview of the latest version of Minx. So initial long signal here on this time frame over here with parallax and Wada confirmation. Nice wave to the upside. We get another continuation long signal here. Boom. We're all the way back on the 23rd. So we're going back a couple days. And then this beautiful, nice Minx exit signal here at the top, but the continuation long getting us in for this movement as well. Continuation long signal here that ended up being roughly a break-even trade. What do we get? Another long signal here and right up. Long signal here without parallax confirmation. So we do stay out of this one. Note the lack of Wada confirmation as well. No confirmation here. So largely, as I said yesterday, largely out of the markets yesterday. Not a lot to do on the daily. And then here we go on the 45-minute chart just earlier today at around 6:30, getting a nice long signal to the upside and carrying up for this nice last wave. And now getting this exit signal right here. You guys can see Minx crossing under as well. So overall, decent day. Again, the market largely kept us out yesterday, except for, nope, didn't catch this one because of the lack of confirmation. But besides that, fairly relaxed, patient day of trading, sitting spot long and looking for other opportunities. Moving over on to the daily here, let's just take a look at where we are based on where we've been. Now we are above the baseline, above the qualifying line. So again, for those looking to exit hedges at a more optimum price, but I've been talking about that for the last few days now. Some individuals have kind of stubbornly held on to their hedge, and they may be right, they may be wrong. We'll see. My rules are fairly simple: above the baseline, not hedged; below the baseline, not hedged. So we'll see how finagling it tends to play out. Sometimes you get lucky with finagling, and sometimes you don't. But the buy zone optimally remains. If we are looking for long exposure here between the qualifying line and the baseline. So it's quite a wide zone, 6,200 to currently, where is the daily baseline sitting all the way at 55.86. You got about a $600 buy area. Look for scale ins with limits, or look for scale outs for your hedges with limit orders, if that is what you guys want to do. Of course, you guys can do whatever you want, just telling you how I would play this. Wadatar explosion still fairly weak, but we do have a falling explosion level, and volume delta divergence is pretty decent here, as Minx is now finally crossing above the daily with the smooth settings, and even with the way we normally trade Minx, been above for quite some time. Parallax is not there yet, which is why there hasn't been any at-risk long exposure. And so typically what I would expect of this actually is for those finagling hedgers to be rewarded here. I would expect to see, assuming price doesn't get massively sold into, and we do see those $4,000, $3,000 prices, which we'll know as soon as we close below the baseline. We're going to have to expect that price continues to go significantly lower once that happens. But as long as price is above the baseline, well, we don't predict wishes and fishes here. We trade in the direction of the daily trend. So I would expect to see, if we do get an impulse wave of selling here, for us to look for opportunities in that qualifying area, that area between the baseline and the qualifying zone right here between 6,200 and 5,500, excuse me, 55.86 and 62.62 to be quite precise. Waiting hopefully for the time that parallax crosses the zero line here, gives us that nice confirmation, and we can kind of reset our indicators after this big movement to the downside, and it be in a very positive area for taking the next significant trade. All right, so fairly simple, straightforward. Looking at the monthly, on the Bitstamp chart. Come on, guys. It's hard to find good help these days. Where are we at? We are nearing the top of that range, close to 69.82, nearing the top of that range, trading at 68.05. We talked about this range, this demand zone right here, which originally we'd wanted to buy in anyways. That is not weird at all. It is not weird at all. A guy with Bitcoin in his name asking about equities. It is cool. It is good, and I support you, good sir. I would love to take a look at Amazon. All right. Right. So on the monthly time frame does tell a slightly different story. Okay. And this is kind of coming clear also looking at SOPR over here on Glassnodes, which is what I had a nice conversation with somebody earlier. Right. So looking at the SOPR indicator, this is the spent output profit ratio. This is an on-chain metric. This is the price sold divided by the price paid, or the realized value in USD divided by the value at creation of a spent output or a Bitcoin transaction. And there's an interesting Twitter thread where an individual graphs this out, and he says what we always see in Bitcoin's kind of cyclical evolution here is that we have SOPR quite high, and then we spend some time chopping between positive and negative, and then we spend most of our time negative, and then the cycle resets, and we go on a bull run, and we are largely almost always above. SOPR is almost always largely above, and then we spend some time chopping above and below as we descend, and then we finally have capitulation where SOPR mostly hangs out below. And if we look to the kind of current cycle right here, we spent a lot of time above as price was moving to the upside as we were going on this bull run. We can see the shift here from capitulation to going above. And now we've spent this time chopping around above and below as price has had its sell-off from its high. And now we have moved into capitulation. Or kind of the question here is because it is not, because this is accelerating rapidly, we don't normally see this big of a sell-off. We don't normally see this capitulation this early on in the cycle. We normally see capitulation later. So the question is this the capitulation that we were looking for, or is the capitulation yet to come? And we are still in that positive, negative before the final capitulation. Now, a quick update on, let's see if we can find it. This is going to be slightly out of date on this account. Perhaps. Actually, I think we can get in on this. Okay, good. Now we do have updated data here. Okay, so we had a nice update on the difficulty adjustment that we covered yesterday, talking about is this going to be good or bad for Bitcoin's price. So far, we've had a nice movement to the upside, of course, not significantly. We haven't seen any big, large green candles or anything like that. It's been pretty steady as she goes, but just continuing to list in the direction of the daily trend now, which is to the upside. But we had this large difficulty adjustment, and hash rate almost immediately spiked about 11% to the upside. So a nice increase in hash rate. A good sign that we did not see minor capitulation and that miners simply turned offline due to economical reasons with Bitcoin's depressed prices, and they are profitable back at these levels, particularly with the difficulty adjustment to the Bitcoin network. So things are looking good on chain. Okay. And again, technically, from a technical perspective, back in that monthly demand area, let's keep in mind at this point in time, after this movement, losing the lower 5920s is not going to be a good thing, in my opinion. Losing that monthly shelf that we established back in 2018. Of course, the daily is going to tell us to be in a trade prior to that, but just looking overall at the structure of price, I would be concerned to see that happen. I would also be happy to see us close the monthly above 69.28. That would be a pretty strong rejection and a pretty good sign. And overall, on-chain metrics too have slowed down as individuals have kind of calmed down from rebalancing their portfolios with these big price moves. More steady as she goes as we proceed. On the weekly, we have not reversed the bullish bias yet. No buy signal, no exit signal. The weekly might actually be giving us a recover from oversold on the weekly, so let's watch how that closes. But overall, trend on the weekly is unfortunately still to the downside. All right, but the daily is giving us a nice movement to the upside. So overall, what are my takeaways from this for the hodlers? My takeaways for the hodlers are keep hodling as always, but as we talked about, even when this happened, was this something to trade in my estimation? Well, we did trade it. We did take the bottom feeder trade. Of course we did. But the area from here to there was too unknown, right? This was largely an untraded area for us. Took a couple of shorts throughout this area. And now we are in a daily bullish trend. Do I feel that this is the time to be entering into a very long established positional trade on Bitcoin? No, we talked about the importance of Hold on, let me make this very, very clear. For the hodlers, for those only looking for long-term positional trades, still feel that things are still unclear at this point in time. Of course, the best, easiest, consistent strategy for those who are sitting on the sidelines and not active traders is just continue to dollar cost average as you always have is the best way to enter into Bitcoin. Buy it, put it away, don't think about it, and think long-term. And for those who are traders, well, you guys already know what to do because you guys are in the group. You guys have watched the videos and you guys know how we trade. We trade in the direction of the trend. Daily trend is giving us some hope. The weekly and monthly longer term trends are not there yet. Now let's look at the only thing that is the fly in the ointment for me. The thing I don't like to see, of course, back here on the weekly time frame. And this is the 1355 exponential moving crossover. Let's make sure that this is use current resolution. Sorry. And we covered this last week, of course, this 1355 exponential moving average cross under. Now, it would be pretty exciting to see price march all the way back up to 8,000, which is currently where that point of cross occurred. Often when we do get that cross under, price will come back, test the area, and then reject. That would be a pretty interesting movement to see. We do have the 100 EMA sitting at 73.29. Sorry, I believe that's actually the 100 small. No, that is the 100 EMA. The 100 EMA sitting at 73.29, kind of standing in the way. This thou shalt not pass, which many are talking about as a retest of support and expecting this to turn into resistance on this retest. So areas to watch closely. Overall, I think that for longer term trades, pretty uncertain area of price. It's been fairly treacherous and wicked. Opportunities definitely on the lower time frames, definitely opportunities on the daily. In fact, I feel like the last good trade was the hedge below the baseline and short signals throughout this area. And of course, the bottom feeder signal coming off the bottom. But still, that would have only taken one to about this far. And from here to here, you've largely been on your own. Volume has been low. This has not been a very attractive area of the market to trade. And there's no shame in that. You don't always have to be in a position. You should wait until the statistics and the odds are on your side to place a risk into the market. Because every time you hit that green button, thinking that you're smarter than the market, you are possibly going to lose money. And that is not what we are here to do. Moving to Ethereum. All things the same under the sun here. Ethereum trading above the daily baseline and actually in the buy zone, coming right up to the top of that qualifying line. Actually still holding on to my at-risk short on Ethereum, looking for this. I feel more confident that we're going to see this kind of bounce back off the qualifying line down closer to the baseline. And of course, we don't have the same positive volume that we see coming in from Bitcoin. So nothing really to do. Let's actually check the LTFs here and see if there were any trading opportunities today. Yeah, right here. And on the next candle, Parallax confirmation, Wadatar and Minx above the daily baseline, and nice impulse move to the upside there. Kind of the last good trade on, there was one right there, just tagging the first take profit there, and a long signal here. That is still a winner if you held on to it, and double up right there. So pretty decent movements coming in from Minx. Ethereum. XRP, same thing. Nice bigger candle out of XRP today. Somebody woke the XRP beasts, causing me to have to close my XRP short out with less profit. XRP BTC is what I was trading, but still. Could somebody get a hold of the XRP community over there and tell them that the dream is dead, man? The dream is dead. But anyways, we don't have Parallax confirmation, but Minx is positive. WADA is positive, sitting here on XRP. We are above the qualifying line. So again, optimal buy zone would be down here below 1593, but above 1404. So watch that one closely. And EOS USD on the daily, sitting at 233.4. Let's look at our indicators here. Again, no real volume, maybe coming in today, but we of course are 1, 2, 3, maybe a possible long signal on today's close. But again, half risk. We're above the qualifying filter. We want to be buying down here, 2155, 1855. That's where we want to be entering in EOS. All right. That's about all we got. Ethereum, Bitcoin, making a move for the stars. The LTFs here. Bitcoin's been relatively stable, but the altcoins have just continued to bleed out. Let's take a look at dominance. All right, interestingly enough, we are actually going to be getting, we got a sell signal on dominance today. Let's see if we can close dominance below 67.30, 67.31, and see if we can get some life breathed into the altcoins. Of course, still a fairly treacherous area to be trading altcoins when Bitcoin dominance continuing to climb to the upside, but getting into a precarious area, I'm not going to lie. All right, and we can see that big movement coming in on XRP over here. Yeah, here is the latest. We just continue to have follow through from that movement. So again, ended up closing out my short that I'm holding from over here, right around here. Ended up having to get a lot of profit back on this baby. Not very happy about that. But again, I wanted to sit through this drawdown, right? I wanted to sit through that, not me. I took my profit, walked away. All right. Litecoin, Bitcoin, again, some of these altcoins to the BTC are showing some signs of strength, but overall in a still very bearish posture. Nothing to do here. Again, the thing I'm most excited about is this potential close above on the daily on the CME future. So definitely something to watch closely. Let's take a look at the traditional markets and see what we're looking at moving into the evening. All right, SPY, NASDAQ, Dow, the Russell to a much lesser extent. Pretty big pumps, man. Pretty big pumps in the futures markets. Let's take a look at the SPY. See how we closed. Obviously, we closed quite positive. So far, we've had an attempt at a we've had an attempt, kind of a swing failure pattern on the, not a swing failure pattern, but a raid on the lower time frames here and getting that resultant sell-off kind of down here at our previous support that we established just a little bit of here. Look at that big initiation candle right there, though. I think this is going to have more follow through to the downside just looking at this. Let's take a look at the daily here. All right, so we will see potential long signal on the SPY mini futures on the daily. On today's daily candle, got the no trade over here, and finally closing above without Minx confirmation, which we do have here, but no parallax confirmation. So there's no trade on the table for me. There's no trade on the table for me here on the SPY. We're going to need to see some more bullishness, some more positivity, and let's see if this ends up failing. But overall, nothing to do on the daily here, I do believe. We'll look at the S&P. We'll look at the ETF here in just a little bit. NASDAQ mini futures. Again, same thing, attempted a second high and a pretty significant sell-off so far. All right, so still overall in a nice bullish trend. Hasn't really broke that to a significant degree. Did get some lag here before this final push to the upside. And again, I think one of the best pieces of advice, one of the best tweets that I saw was somebody posting, they said, I can't remember who it was, but they posted on Twitter, they said, listen, if you think that this is... if you think that this is the situation that we're going on, if you think that this is something that we're going to quickly recover from, then you have been given a fantastic buying opportunity. If you think that this is a more significant economic downturn that is going to be with us for a very long time, you have been given the opportunity to gracefully exit your long positions, right? You've been gracefully given the opportunity to exit your long exposure, not at the bottom. So if you are really worried and you think that this is going to be kind of a long-term fundamental thing, then you should most likely act on that. Otherwise, sitting on the sidelines, knowledge is useless without action in my book. So you have to act on the knowledge that you believe that you have. You have to trade your biases at the end of the day. Now, a nice objective system makes that a lot easier. All right, so much to talk about. The euro dollar continuing to rally. Gold not having too much of significance. Again, nice rally over here, but largely just kind of consolidating. And silver, been very exciting to trade. The volatility on these has been very good to trade. So let's just take a look at silver on the 45 over here on Awanda. Again, good, nice, good volume coming in. Social distancing. Yeah, so we got to social distance with the lemons, man. I mean, we got to respect that social distancing, bro. I mean, I've been touching the lemons. They're going to come out of my basket. It's, you don't want to be doing that, man. Keep the hands nice and clean. You know what I'm saying, bro? All right. We're going to do lemons, man. Come on, dude. Who do you take me for? All right, then. Looking at the lower time frames on silver, looks like it's been kind of a rough one. Overall, a lot of chop. Let's see here if we actually would have gotten... Yeah, not a good signal here. Not a good signal here. Two losers, another one, and a good, maybe a good long signal over here. We finally have confirmation now. So today would have been roughly a losing day trading silver on the on the futures markets, or the CFD markets, Take a look at gold. I think the 15-minute would have done you better. The 45-minute a little bit less so. I bet right here would be pretty good. So zooming out, taking a look at the daily on gold spot. Again, big movement to the upside. And typically when I see these rebounds, when I see these V bottoms up and we cross and close above the baseline, I generally expect it to not just keep climbing to the roof like everybody thinks it's going to. I'd be a little hesitant on both gold and silver. Silver a little bit less, so I'd be a little bit more aggressive on silver right now. But we're just not there, guys. We're just not there. So be patient. The trade will come. Individuals have made a lot of money over the last few weeks, and you guys want to be positioning for the next opportunity. Don't want to be jumping at the first opportunity that comes your way. You want to be very patient and wait for the big move. All right, so again, we talked about traditional markets getting tentatively back into bullish territory with the SPY closing above the daily baseline today, on today's daily close. Minx crossing above, Parallax not quite there yet. And again, we want to be a little wary looking at WADA just popping up like we do. So areas to watch here. Areas to watch are going to be Parallax getting bullish here. Rising explosion level on WADA Atar explosion, which again is going to have to take any kind of bearish bias and kick it in the teeth at this point in time as we watch closely. And then really looking for a little bit of consolidation here and a continuation signal for Minx. If one wants to get long exposure to the SPY, just watch the chart, watch the market. 266.75 is when we begin to get a little overextended. Again, the nice area here is going to be 266.75 and 251.74 is the area that looks good for the SPY. Again, crossing and closing below now at this point in time. This area right here, 243.06, is going to be sending us back into bearish territory. A full confirmation signal if we close below. Where's this at? 236.28. And that's what I would be watching for the next short signal. That nice wait for the rejection, wait for the follow through to the downside if it is going to happen. And there's going to be your signal, your objective signal. Same for the Qs, same for the Dow, whichever ones you want to trust, whichever ETFs you want to trust. The dollar continuing to get hammered as the Dixie just sells off massively down to the daily baseline, seeming to cross and close below. Look at Minx getting bearish. Look at WADA getting bearish. Look at Parallax getting bearish here. We might be entering into a bearish trend on the Dixie here. Something to watch for. Very interesting. All right. And Brent crude, again, after an attempt to pop up, here we go. Down she goes, ladies and gentlemen. Down she goes. So let's watch. Have we gotten... No, not yet. We haven't gotten a continuation signal from Minx, so definitely watch for that printed CS. We got one over here, led to this. Let's watch for this and see if we do end up getting that $18 Bentley crude we all talked about. All right, T-notes crossing and closing below the daily baseline and surging up a little bit. Anybody that followed along with the 5-year T-notes has got a better opportunity to exit at a better price at this point in time. So just be patient, just watch. We're below the baseline. That means something. If we cross back above, we'll be waiting for fully confirmed signals. Again, the daily has turned a little ugly here as we've kind of crossed under, and Parallax is hinting at crossing below. Jim Spen, it's Bentley crude oil around here, bro. It's Bentley crude oil. All right. All right, still watching the Aussie Kiwi. We're not quite there yet. Canadian yen, got my eye on that. And the dollar Canadian, watching this one pretty closely to see if we are going to get the full-on bearish signal. Friends, T-notes were up 8%, and their Chase banker was saying, your investment did better than anyone else. You should invest more money. Man, Chase Bank is a scum, a hive of scum and villainy. I'll tell you that right now. Of all the banks out there, Chase is the worst. Jamie Dimon is the worst. All right, so we've got a lot of news to cover. Let me know if you guys have any chart requests. Post those down below. The moderators will bring my attention to them. We're just going to take a brief break just in time to get everything together for that. Let's do this. Of course, if you guys are watching on YouTube, make sure to subscribe on all notifications. You guys can also follow us on our socials over here, Twitter and Instagram, where we post exclusive content. Don't go anywhere, guys. We'll be back in just one moment with today's news. All right, we're going to bring you today's Crypto Currently segment where we break down everything going on in cryptocurrency, keeping you guys informed so you are ahead of the curve. We're going to have a little bit of a different format tonight. Let me know if you guys like it. Our first story today is... All right, our first story today is going to be Binance officially getting into the debit card game with today's announcement of their Binance card product that's to be issued by their partner, Visa. Now, the card is going to see its initial rollout occur in Southeast Asia, with the nation of Malaysia being announced as its preliminary test bed before its use is unlocked to other global regions, later states the Binance website. Now, like other so-called cryptocurrency debit or credit cards, clients would be able to spend their crypto balance when they swipe, as the digital assets are converted into fiat on the fly and piggyback off of the established debit card's pre-existing network. Now, what is novel about the Binance Card's approach is that you're going to be able to carry an internal balance denominated in cryptocurrency with BNB and BTC as the initial tokens of use for this product. Now, Binance's Josh Goodbody, he's the head of growth over there at the Binance Card division, spoke to Cointelegraph earlier, explaining that clients can deposit BNB and Bitcoin to this new Binance Visa card, either directly from their Binance exchange balance or sent from any crypto wallet. During the early testing period, transactions completed using the BNB card are going to be settled in US dollars, which will unfortunately mean that they are going to be subject so users will be subject to paying Visa's foreign exchange fees for most purchases, seeing as the initial rollout will be in the Asian region. But despite that, Binance is reassuring users that support for native local currencies will be made available over the course of this year. And the beta testing period for the Binance card is going to be taking place over the month of April, exclusively to clients residing in Malaysia. So if you guys have ever wanted to visit Malaysia, now is probably not the time. Now, ordering the card will cost around $15, although Binance promises there will be no additional monthly or yearly maintenance fees. Take that. MasterCard, along with the plastic Visa card, Binance is going to be pairing up the Binance mobile app to help users manage the card. It's going to handle their deposits, viewing transaction history, as well as PIN changes. Obviously, another milestone in what seems to be Binance's vision to be a sprawling financial giant on the same wings as Visa, having made major progress on their 2019 roadmap, which included their first major IEO, launching their own blockchain, their US subsidiary Binance US, their Binance DEX, and even now adding derivatives to their trading platform. CZ, their CEO, has repeatedly stated that his vision for Binance and the cryptocurrency industry as a whole is much wider in scope than just being the leading exchange. Their goal is to disrupt and revolutionize the entire financial system. Now, this cryptocurrency-powered debit card is just the natural evolution of that master plan, or as they explain, their plan is to take Binance Card International as a global leader in crypto payment processing. Part of Binance's success in the space is going to depend on their constantly expanding fiat to crypto gateway options so that they can integrate an ever-increasing amount of banking and debit card partners so that they can make it easier for users to access their exchange, their platform, and move in and out of crypto assets anywhere in the world, very much like John Wick. So what do you guys, so the question here obviously is quite simple. What do you guys think? The Binance card, it looks pretty snazzy. It might want to have it in your wallet, right? If you can't get the Visa Black, right, at least you can whip out a black card when you take, your significant other out on a date. But, the question here is who do you guys trust more at this point with your money? With the entire banking sector in turmoil, do you trust your money at local banks, at local, national, and state banks? Do you feel that that is on the way of the dinosaur? Obviously, the big hullabaloo here is people are saying, well, it's BNB. You can't trust CZ. You can't trust Binance. They're as shady as they come. Is that any different than JP Morgan Chase? I mean, are you guys familiar with the reports of fraud? Are you guys familiar with everything that they do? So at the end of the day, do you want to step up and be a sovereign individual with control over your own currency? Well, you can do that if you want to engage in cold storage and securing your own private keys. The risk of that is being your own bank and not having any sort of protection. And obviously, We covered the other day how exchanges can now get insurance for up to $100 million for cryptocurrency. So this is an expanding global network. So are you ready to start using your crypto balances for minor day-to-day transactions and show off to your friends once the lockdown is over and restaurants reopen? Like, hey, don't worry, guys, I got this. Swipe. Let me pay for that with my Numenaire. Right? So we'll see. All right, so next story of the day is going to be an update to a story that we've covered before, of course, but let's give you guys the latest concerning the Telegram initial token offering, which has found itself embroiled in an SEC securities case over the how they chose to do their funding. Well, this is embarrassing. I thought I had this all nice and neat. I was apparently wrong. All right, so we'll do it the old-fashioned way. Sorry about that, guys. Okay, so here's the latest on Telegram. Now, the last time that we ended up talking about Telegram, we touched on the January document dump from the SEC against Telegram and their founder, so let's pull that up here. Let's see here. Here's the injunction. Here's the official court report right here. Now, this court order right here, this allegation is that their token sale was merely a substitute for an actual financing round. So they weren't actually offering anything of validity, and it was a security. And it quickly became evident from the SEC's investigation that the launch of Telegram's blockchain project to investors anyways, it became pretty evident to investors that the SEC was absolutely certainly looking to shut down their project. The regulators were looking to shut them down. And so Telegram offered two options for investors into the initial Telegram offering. They could either request a refund for 77% of their original investment amount, or they could wait a further 6 months for the platform to launch and token distribution to take place. So listen, guys, you can either lock in a 25%, 20, you get it, but let's lock in a quarter, 25% loss. Let's just round. Let's lock in a 25% loss on your investment right now, or we can give you these tokens. Just wait 6 months. So now a majority of the investors did decide to stick it out, meaning that the Gram token distribution that was scheduled for April of this year, it was the Telegram token distribution was scheduled for April of this year. But it now seems that they are changing their minds and jumping ship, looking to get their refunds after all. All right. So they have switched. Their sentiment. See if we can switch this to English. There you go. So, at least 10 large TON investors are ready to exit the project by returning the money. Now, the court ruled this week that the Gram token distribution would constitute an illegal security offering and moved in with an injunction to block the token distribution from moving ahead, citing in the ruling the realities of the Howey test. In the context of the Telegram scheme, resale of the Gram tokens by participants into any secondary public markets would be an integral part of a security sale. Because what are the investors going to do as soon as they get their hands on the Gram token? They're going to dump it on the open market, a security. Now, considering these economic realities brought to light by looking at things like the Howey test, the court found that in the context of that scheme, again, they can't do that. So they blocked them. They blocked the token distribution. All right, so this is rough. Now we just covered over on this page. What's his name? Yakov Berinsky. He is also known as #CIB, wrote in this Russian publication that Telegram investors have had enough. At least 10 large investors in the Telegram open network, known as the TON program, are now looking for that refund after news of this injunction hit and became widespread, well known. Again, what do you got? What we were just talking about earlier. What happens when you typically see large movements in the market is that which was previously not known becomes known to a large amount of people, right? So investors are now faced with the prospect of a much longer wait than a mere 6 months while they wait for the Telegram group to sort this out, to see the network launch and the tokens to see distribution, if they ever see the light of day at all. That is, of course, because again, as of right now, they're not allowed to launch their token distribution at all. And to top it off, of course, we have the current economic troubles rocking the current markets, meaning investors are desperately seeking a safe place for their investment funds right now. And locking them up in the Telegram blockchain project with a very uncertain future is suddenly less appealing than ever before. I don't know about you guys. Not where I would want my money. Now, Berinsky continues that overall, looking at the economic climate, that 77% refund looked a lot more appealing than it did back in October. Now, listen, in all fairness to the Telegram project, all is not yet lost for their aspiring blockchain project. A preliminary injunction is just that, preliminary. And a final order from the court is not yet on the table, and Telegram certainly has the right and probably will appeal. But the outcome doesn't look positive. This whole ordeal could carry on for months to come, if not years, and investors are already getting itchy to pull out of the project. Not to mention, as we talked about in January's document dump, which I think we can get linked to right here. The CEO of Telegram, Pavel Durov, caught with his hands in the proverbial ICO cookie jar, with the SEC's investigation revealing plenty of incriminating evidence of Pavel turning to this form of fundraising despite being advised by his legal team not to do it. So, not looking good. Not looking good. All right, now, our next story, and I hope this one is going to work this time. Let's go check it out. Our next story is going to be about decentralized finance and Coinbase. All right, so Coinbase, the leading US-based crypto exchange, has now integrated support for decentralized finance protocols on its mobile wallet app. In an announcement on March 25th, the Coinbase wallet is now going to allow users to earn interest on cryptocurrencies through decentralized finance, decentralized applications, DeFi dApps, Compound, and Didix. Now, access to these DeFi apps was already available through Coinbase's built-in decentralized application browser. However, this latest integration means that much broader exposure and ease of use for users and improvements will improve in regards to these decentralized finance protocols. Apple users are going to be seeing the iOS rollout this week, and Android support is scheduled for April to get your hands on these. So with these updates, the Coinbase wallet now supports advanced lending options for Ethereum, in addition to a range of Ethereum-based tokens. Now, if you're not aware, both the Compound and Didix DeFi protocols are algorithmically driven, automated lending platforms, which are built on top of the Ethereum blockchain, with Didix also offering margin trading services for those who want to utilize it. Interest rates for lending on these protocols are floating, and to give you an idea of the rates, at the time of this announcement, they're currently offering annual returns ranging from 0.03% to 4.17%. And these markets are still relatively small and quite niche this early in the world of DeFi, with Compound currently sporting about $79 million in locked up collateral, and Didex's smart contracts currently managing more than 20 million over there. Now, Coinbase states that this new DeFi support will allow users to earn interest on their crypto holdings in just a few taps, while adding that users can also quickly cash out by withdrawing their crypto from the smart contract on whatever platform back into their wallet. Now, Despite all of the optimism surrounding the integration of these DeFi options, Coinbase does urge users to exercise caution when getting involved in decentralized finance applications, with a disclaimer stating that DeFi lending apps are relatively nascent and come with risks. And the warning continues, describing DeFi apps as programs running on the blockchain, and like any computer code, they can potentially have bugs that may lead to the loss of funds, as well as reminding users that returns are not guaranteed and your deposits are not insured either. Now, in terms of security threats from DeFi, one high-profile warning went out just this week. On March 23rd, the crypto wallet company Zengo published a report highlighting a major security flaw in the smart contracts these decentralized applications use when interacting with the user's crypto wallets. Right here, you can see the image on the right-hand corner of the screen. Now, this report from Zengo asserts that when a user grants a smart contract permission to execute a single transaction involving their wallet, that dApp is in fact granted full control over all of the tokens held within that wallet, not just the tokens that a transaction would be signed for, the tokens in a transaction itself. As Zengo also claimed that this authorization is permanent, meaning that even users who have ceased to use a decentralized app are still vulnerable to the flaw. Again, DeFi is obviously a very nascent technology and still highly experimental, and we urge everyone who is going to interact or experiment with these contracts, because they are interesting and fascinating, to proceed with caution when interacting with these protocols. But Ethereum's future has looked increasingly bright thanks to this developing decentralized finance ecosystem and use case. But of course, as with all things, caution is still recommended. So what do you guys think? Are you guys excited about decentralized finance coming to Coinbase, the ability to interact with it? Is this the new mainstream, or is Bitcoin the next Bitcoin and Ethereum goes the way of the dinosaur? Please don't forget to let me know down in the comments section. Always interested to hear what you guys have to say. And of course, let me know what you guys want to hear more about, what you guys want to see us cover more, and bring you guys the news on. Now, with that being said, let's head back into the live scene and answer your questions in today's Q&A segment. All right, Boris Bitcoin had asked me to share my thoughts on Amazon on the daily, and that is what we are going to do. All right, let's take a gander at the weekly here. All right, so discretionarily looking at this, I wouldn't be surprised to see a movement into this area right here, this gap fill, and then you kind of got to make up your mind from there. Breaching above, you can look for movements to the upside. Breaching below, you can look for movements to the downside. Trades. Now, keeping it simpler than that, we do have some potential bullish initiation today. Of course, Minx is just not there. Look how quickly we have snapped back. So Minx has not turned bullish. We've got some work to put in for Minx to turn bullish. Parallax is not there yet either. So largely, neither is WADA. So the only thing here that really is kind of positive is this chop up into and above the daily baseline. So this is certainly an area I would like to be cautious of. We do have earnings coming out in just a few days, 1, 2, 3, 4 days. So 3 days following tomorrow's close. Well, actually next week, because the market will be closed tomorrow, following tomorrow for the weekend, of course. So that would be putting us to Friday, Monday, Tuesday, Wednesday. We'd have earnings. And again, maybe we can see that kind of drift up into this gap fill area potentially by then. So opportunity here potentially to the upside. Nice volume to the upside overall, objective raw volume. But trending wise, looking at the indicators, we are not there yet. This is telling us to be cautious and be careful of this potentially fake move to the upside. So being as that is, the only thing that I can revert to is discretion. Looking at this area that needs to be filled, I would expect potentially to see price move to this area and then maybe some negative movements come following earnings or post earnings, because I expect those reports to be fairly negative. But of course, remember, all that's priced into the market already. Everybody knows that earnings reports are going to be negative despite what companies say. So that's my take on Amazon. Looks promising. Obviously, a very good reversal trade for anybody that caught it. But I think that that is done for right now. All right. That's about all we got. Okay, to the main thing, and then we're going to wrap up. All right. Thank you guys so much for joining me for another episode of Breaking Bitcoin. I'm your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hope you guys have a fantastic evening. Make sure if you guys are watching us on YouTube to subscribe to the channel and turn on all notifications. Smash the like button and let me know down in the comment section what you liked about today's show and what you guys would like to see tomorrow. If you guys are beginning your journey toward trading and you guys would like to take advantage of our indicator suite, our mentoring, our educational content, as well as our community, make sure to check out everything that we do at premium.crackingcryptocurrency.com. Of course, you can also follow us on Instagram and Twitter, where we post content you guys will not see anywhere else, only gets posted there. After today's show, make sure to go check out some of our interviews from the Crypto Currently playlist. Recently, Samson Mao and, of course, Anastasia Sabraic. I believe I pronounced that correctly. It's a tough one. From Freedom Watch. So it is a good one. Make sure to hop in the Discord and check out our trades channel as well. You guys have been absolutely fantastic. Have a great night. I will be back tomorrow at 9 p.m. Central Standard Time with the rest of the team. Trade safely, guys.